Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio performance, why there's 48.74 in buying power, the individual stocks in their performance, when I plan on buying Mickey D's and Berkshire B, and then how we're going up against the Dow Jones Industrial Average and how we compare to the S&P 500. So, jumping right in, today we're down about $10 for the week. We are up $76 for the month. We are up $844. The 3 month mark, we are up $146. It's a big dip right there on June 21st. Then for the year, we are up $7,600, up 24.76%. That's the important one. And then all time, we're up $9,272, up 31.67% since April 13th of 2018. But again, guys, the percentage we want to remember is around 25. So the buying power is at 48.74 because I had an automatic buy set for 3N, which I do love that company, but I like Procter and Gamble and Clorox more. I know I've gone a bit back and forth, but I do want Procter and Gamble and Clorox. Nothing wrong with 3N. I just like the dividend growth more of both Procter and Gamble and Clorox. So, and they have brands I use every day, and I'd rather have the consumer products. But making up for that loss in real estate, we're going to be buying McDonald's for the next set of months. So we'll have plenty because honestly, 3N is just like a lesser version of O. They have different types of properties, but I do like Realty Income's property base better than 3N's. The big catalyst for 3N was the fact that they own Mr. Hotshine, the car wash, which I do, the car wash business, which I do love that revenue stream. But I like, Clorox and Procter and Gamble's product line more than I want to own self-serve car washes. So that's why there is 48.74. I had an all-time buy until I canceled it for national retail properties, and I didn't realize that. So I had enough cash to buy it. So when I dropped below that cost, it bought it for me, which is fine. I bought it right at market close too. I was like, dang it! So I couldn't take it out. So I had to sell that. That's why I have 48.74. But jumping right into the portfolio today, we've got Realty Income sitting pretty at 120 shares, right about $70.60. 120 shares, about close to $8,500 worth of market value. Average cost is 67.02. So right now we are still up. All time, we have 22% of the portfolio in Realty Income. That's almost a fourth of our investment portfolio, which is fine. I love Realty Income. It wouldn't even bother me if I bought more and got to 25%. Today we're down 760 total. We're up nearly $425 at 5.3%, and a dividend coming in. This is every single month, 28.26, and I believe that's for the 120 shares. So we're being paid accurately for our total position there. So honestly, guys, we're pretty close to getting an AT&T share guaranteed every single month, which is great. So regardless of whether or not the companies for the month pay me enough to hit $100, Realty Income is kind of that extra that will push us over. I'm pretty sure every month I know now is over $100. But that's what that's going to help as well. So because Realty Income increases their dividend every quarter, so I can expect about four smaller increases a year. But given that we have over 100 shares, even if it's like total like a cent, it's still going to be $1.20 a year. So holding this for the next couple of years, I'll be up to $30 a share in no time. Sorry, $30 a month in no time, which is the long-term goal. I don't think I'm going to be buying, say, AT&T every month. That was just, I know that the price of that stock ranges from like $28 to $30. But eventually, I could be buying something like a CocaCola or a Pfizer every single month, which is the goal. So, and honestly, I could even be buying a share of Realty Income with itself every month, which then would just compound every month as well. So that's the real long-term goal, is to be buying Realty Income. But until I hit that dollar amount, I'm going to be buying something like a Pfizer or a Coca-Cola. So love that they're paying me almost well, $28, but getting close to 29 by the end of the year is going to be phenomenal. Then we've got Coca-Cola, which is my favorite stock in the portfolio. We've got 50 shares now, $2,800 worth of market value. That will be going way up. Average cost is 54.08. 7.34% of the portfolio is in Coca-Cola. That could be all the way up to 15, maybe even 20%, and I'd be fine. I just was holding off on buying it because it is really above it was far above my average cost, but now that I bought more, I don't really mind. You pay up for quality. Coca-Cola is a phenomenally run business. Down $6 today, up $121.88. Total up 4.5% on Coca-Cola. Then we've got the new additive of WP Carry. We've only got one share. Market value $79.79. Average cost is $80.60. So we're down, which is great. 0.21% of the portfolio is in WP Carry, which is fine. It's the newest position. I added this with leftovers from Coca-Cola and the Altria purchase. I wanted more real estate, and they're phenomenally run, great dividend growth as well. Kind of the same basis as Realty Income. I just like them more than 3N. Today we are down 47 cents. Total we're down 81 cents, down 1%. Then we've got Altria, the big payer for the 7 months. It was at 152 shares for a really long time. Now it's at 160, almost $7,600 worth of market value. Average cost is right around $47.60. Almost 20% of the portfolio is in MO, so it's pretty even with Realty Income right now, which that will be going down as we buy more stock in other positions. Down $16 today, down $49 total, down 0.65%. So this one is one that Altria gets beat up by the market a lot given the nature of their products, and that's part of why it's kind of my same theory on oil that I had for a while. It's going to get beat up a lot, and that's just going to give us a really good option to buy it at good prices. And so this is one of those that I feel like will steadily go down, but not to a point that it's like worrisome. It's just with regulation and in bad press, and this is one of those that gets slammed a lot, and so that's part of why it's in the portfolio. It's a great dividend grower. The products are highly lucrative and consistent, and it makes for a great business model. So that I'm not surprised to see that it's down, but that's what I want. It's one of those that's like a no-dub buy for me. Next is Abbvie. We've got 74, should be 75 shares. It bugs me that it's not a 5. OCD. $8,400 worth of market value. Average cost is right around $80 a share. Almost 22% of the portfolio in Abbvie. So Abbvie and Realty Income are very close in total amount invested. Down $22.20 today, up $2,400 total, up almost 42% on Abbvie stock. Then we've got Procter & Gamble. We got one share, $141.86 for market value. Average cost is $143.75. 0.37% of the portfolios in Procter & Gamble. Today we're up 46 cents. Total we're down $1.88, down 1.31%, and a dividend coming in of 87 cents for our single share. I will be buying a lot of Procter & Gamble. They have an insane product line that I want a bunch of shares of Procter & Gamble. They own Gillette, they own Tide, they own Pampers, they own Bounty, they own Charmin. So it's like one of those consumer staples that you probably buy, you just don't realize that you're buying it. And that's I think they're one of the absolute strongest stocks on the stock market. It's in my top 5, and that needs to be reflected in the position. Next, kind of the same story with Clorox. We've got 2 shares, $325 of market value. Average cost is $163.19. 0.85% of the portfolio is in Clorox. Up 29 cents today, down 93 cents total. They have an insane product line as well. Of course, Clorox, but then they have Tilex, they have 409, they have Burt's Bees, they have Hidden Valley Ranch, which was surprising for me. They also own, I think it's called King's Royale Charcoal. They have kind of a weird product line as well. Procter & Gamble's makes a lot more sense. There's this kind of more. They also own cat litter as well. So they've kind of got like far in between brands. Like they have the biggest brand in their category for a lot of their product lines, but they just don't seem like they'd all be under the Clorox umbrella, which is really cool. That's why I like them so much. But the big reason, it's funny, for Procter and Gamble, the reason that I'm invested in them is 100% Gillette. I love Gillette. If I could have bought them back when Berkshire had uh, a big position in them, I would have just bought Gillette stock because I love Gillette. I use Gillette products all the time, as well as Old Spice. Um, but I do like Procter and Gamble's product line better, but it's gonna be close. Like Clorox is gonna be right behind them with share count. So total percentage of the portfolio, I want like about 10 to 12% in Procter and Gamble, or probably 10 to 15, and I'd probably keep Clorox around 10%, like 10 to 12. So I like Clorox, just not as much as Procter and Gamble, and that will be reflected in the overall share count. But I still love the company. Then we got Aflac, my insurance play, the Ducky Company, 115 shares, $6,400 worth of market value. Average cost is right around $50 a share. About 16.8% of the portfolio is in Aflac. Today we are down a little over $3. Total we're up $764, up 13.43%. Then we've got Pfizer. Um, actually been going up pretty well. I don't know why. I haven't seen press to see why. Maybe the vaccine. Maybe the numbers for the revenue were better. I haven't actually heard anything as to why Pfizer's been climbing. 92 shares, around $4,200 of market value. Average cost is around $40 a share, so we're up pretty nicely on Pfizer. Almost 11% of the portfolio is in Pfizer. Today we're up 40.04. Total we're at 518.05, up 14.12%. And a nice dividend coming in of 35.88. So Pfizer's going to pay me 35.88. Aflac is going to pay me, I think it's like 30, around 35 as well. So that's 60, closer to, well, $70. And then with Realty Income, it will be putting it over $100 for that month as well. So I was going to buy more Pfizer shares, but by the time I got paid, I didn't have enough time to buy the shares before they went ex-dividend. So I could have bought the shares, but just like what happened with Abbvie last month, it wouldn't have been reflected in the dividend payment. So it was better to buy. It was a better purchase to buy CocaCola, WP Carey, and Altria. That's why I did it that way, because I wouldn't have actually gotten the payment for Pfizer. So I will be getting 100 shares of Pfizer, no problem, like within the first 3 months of next year. So our percentage, I believe, was about 25. Yep, about 25%. So Mickey D's, I want to buy it because it is a huge real estate empire. The Founder is one of my favorite movies of all time. It's how McDonald's is built and the business model, how they maneuvered their way into the biggest franchised restaurant in the world. Love McDonald's. I eat there all the time. It's a no-brainer for me. So I want Mickey D's. If I could get it around the $210 mark, I would, but I'd still buy it. I know you got to buy. You have to put up more money for good quality companies, and I feel like that's what McDonald's is. This is one of those that Buffett actually sold, and he regrets. So he did that with Walmart, he did that with McDonald's, and he did that with Disney. So I will not be owning Walmart, but I will be owning McDonald's. So when March comes around, I will be buying 8 shares of Pfizer to get it to that $100 mark, to be about $39 to be paid to me, and then the rest of the money will be going to McDonald's. And I'll be building up the McDonald's position to be pretty big. I would want it to be around 10% of the portfolio as well. Then with Berkshire, let's see how we compare. We won't, but let's take a look. At 25, so they're 10%, almost 11% ahead of us. With the Dow Jones, we are about even with them, about 2% above us. And SPY, I'm expecting, about 32%. So Berkshire's still outpacing both of them. We're about 8% behind the S&P 500, and then about 3% behind the Dow Jones Industrial Average, respectively. But we're way behind Berkshire, about 10%. So even the S&P 500 is lagging about 4% behind Berkshire. So yeah, love Berkshire Hathaway. If I could put my 401k in Berkshire Hathaway stock, that'd be the only thing I'd own for my retirement. But I can't. My 401k doesn't allow that. So this will be kind of my the closest thing I have to an ETF in the portfolio. And I'll happily own this for the rest of my life. Love Berkshire, love Buffett, love the dividends that they get in, love how they get from the companies that they own, love how they reallocate that capital. So there's a lot to like about Berkshire Hathaway. And if I could buy an A share, I would, but I have to buy B shares because I'm not worth $500,000. So I'll be buying Berkshire Hathaway around Christmas time because that's going to be my gift to the portfolios to just get those companies, get that exposure to the smartest investor alive. And that will be a yearly thing. I'll be buying at least a share of Berkshire every Christmas. So that's the plan, guys. McDonald's is gonna fill out the dividend portion of the portfolio, and then Berkshire is gonna be the final position in the overall portfolio. So McDonald's and Berkshire will be added, and that'll be it. So thank you guys so much for watching. I hope everybody is having a GGD, a great green day in the market. Remember to hit the subscribe button on my channel, that dividend guy. When you do hit the bell notification so you don't miss any updates, guys, we're above 550 subscribers, which is phenomenal. We're up to like 44,000 views. I don't usually pay attention to the numbers, but every once in a while I check just to see because it's awesome to see it grow. So thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.